Welcome back to the ETF Inspector. Happy Labor Day, and with markets being closed today, I wanted to do something a little different than usual and do a deep dive into two very popular ETFs, those being JEPI and JEPQ. These are JP Morgan's Equity Premium Income ETF and JP Morgan's NASDAQ Equity Premium Income ETF. This video is different than what I normally do. I usually am covering the day-to-day trades and holdings on some high yield funds. But as this still falls into that income strategy funds, and it is definitely, they are popular funds that are always spoken of within this type of environment, I wanted to do them some justice and dig deep, especially since the channel is called the ETF Inspector. So everything I'm going to be talking about is information that is accessible to you, but maybe you might not have gone through the websites and dug deep. So I've done it for you. You can just watch this if you'd like. So when we take a look, we start off JEPI. Go to the fact sheet, nice and quick. It's like a 1 to 2 page document. We've got summary prospectuses and then larger prospectuses, lots of information out there. So we'll start off highlighting just the size of the funds and the inception date. So JEPI started in May of 2020, and there's currently about $40 billion in assets under management within the fund. When we look at JEPQ, they started a couple of years later, May 3rd, 2022, and there's almost $29 billion managed within the fund. Now, when we read in the approach, both say they're generating income through a combination of selling options and investing in U.S. large cap growth stocks. When I dug deeper into the prospectus, JEPQ also says that they use the whole market capitalization, so they will go after mid cap and small cap as well. I read it, then when I went to try to find it again to make the video, I couldn't find where I found it, and I don't want to spend a lot of time digging through and just wasting your time while I scroll. If you're interested in Morningstar ratings, JEPI has a 3-star rating in the category of derivative income, where JEPQ, wrong page, has 5 stars. Not sure if that kind of thing means anything to you or not. But with both of them, at inception, they started right at or around the $50 per share mark. So when we take a look, I like a lot of different websites for financial information. Market Watch is nice just for like the overall look and extended hours. I like Trading View if I'm going to be using indicators. I like actually Yahoo Finance is still nice when comparing one to another. But so just for what we're doing here, I'm going to just use Market Watch most likely for the video. But when we take a look, let's see what we want to talk about. Both are monthly income payers. So that's now we're getting down to funds that are paying weekly. Monthly was kind of the special thing for the last couple of years, and we're all familiar with the quarterly dividends. So these have stayed monthly. They have not switched over to weekly. I haven't heard any talks of that either. But just as far as monthly, you can really get your compounding interest to get to work for you. Depending on the website you look at, obviously these fact sheets are based on like a certain stop date. Their 12-month rolling dividend yield of 8.25%. That's as of 7/31, July 31st. This is for JEPI, and then JEPQ claiming 11.52% as of that same date. I looked them up similarly on Market Chameleon, to help look up other things like dividend history, and they showed 8.4% for JEPI and 11.1%. But this is going to be more up to date as they are already projecting the next month's payment, or this week actually is when it's going to come out for both JEPQ and JEPI. When we look at expense ratios, they're both the same, 0.35%. So if you are a normal watcher of my videos and you're used to the yield max, very actively managed funds, those are 1.3 to 1.4%, with some of the lesser ones being in that 0.9 range. So these are less expensive as far as the expense ratio is concerned. All right, when we take a look at the people managing the fund, I believe it's in the overview. We do have some overlap as far as the portfolio managers. Hamilton Rainier, if I'm saying that correctly, is at the top on both pages with 38 years in the industry, 16 years with JP Morgan, and he has been with JEPI for the entire 5 years that it's been around. And similarly on JEPQ, same person, same experience, obviously 3 years with this fund because it's been around for 3 years. There's also overlap with Matt Benson and Judy Jansen, both being in JEPI and JEPQ. And then you have a couple of different ones. Eric Moreau and Andrew Stern have both been with JEPQ since inception, and Rafael Zingone has been with JEPI since inception. So definitely lots of experience there and overlap because it's similar strategies, but not necessarily the same thing, although the names are very similar. We will look into the holdings in just a minute. So you're able to download these fact sheets that I've got. You don't even have to download it. You just can click on it and it opens up right here, fact sheet. But then if you are interested, right, we talked about the performance and fees. It didn't switch. We'll come back to this page for performance in just a minute. But the portfolio holdings, okay? So JEPI, as of close on Friday, I had 125 holdings within it, where JP Morgan, JEPQ, has 107. So when you take these, I mean, obviously everybody likes to look and sees the top 10 holdings, but if you've got 125, I want to see all of them, not just 10. So you download all the holdings. It ends up giving you a fairly ugly sheet there, right? That's not great to look at and has a lot of extra information, not necessarily helpful, or columns that have nothing in them. So what I've done from there is I copied these over into Excel, put some headers on there, added a little bit of information, and highlighted some things to help us take a look at it. So when we look at JEPI, right, they had approximately 107 holdings, I believe they said. As we scroll through and take a look, one thing I want to point out is very even allocation, right? The largest holding at the top is MasterCard, with 1.6% of the money being within that. And as you can see, varying by small fractions of a percent as you shrink down to the smaller and smaller holdings. Now, JEPQ differs in that NVIDIA, being the top stock within it, is almost 8.5% of the money in it. And very quickly in the top 10, you range from 8% down to 2%. So it's not as evenly allocated. It's very heavy on the top 10, whereas JEPI is not. So I didn't want to sit and take the time to read through every single holding out of 107 and 105, but I did want to point out that it's almost entirely United States funds. There are a handful from out of the country. I've highlighted them. Ireland seems to be the second largest within it, with only a handful from them. But you've got Train Technologies, Eaton Corp, Medtronic, Lindy, and then some from the Netherlands, ASML and NXP. Switzerland's got one in there, some more from Ireland. So that's JEPI. All the rest are from the US. JEPQ, similar. There's Lindy again from Ireland, NXP again from the Netherlands. You've got Shopify over here from Canada. Again, Netherlands, Ireland. So these are, for the most part, holding domestic stocks. Okay. What I was looking to see was they say they generate income by selling out of the money calls. So JEPI sells calls on SPX, which is the S&P 500 fund, and then JEPQ sells calls on NDX, or the NASDAQ 100. The problem is, and as you can see, right, when we take a look at the method, right, these are physical stocks, and then you get down to these SPXs, and they're synthetic, right? So these are equity-linked notes, or ELNs. But what I was hoping to see was the strike prices that they have sold these calls on, and they did not give them to us. So there were columns that I deleted that I showed you on the download that showed strike price and values. They were all blank. So they don't, not quite as transparent as, say, a Yield Max, who's showing you every trade every day. I was hoping that we'd be able to look in here and see the strike prices and the expiration dates on these options that they sell, but they're not showing them in their holdings. And also, if you're familiar with anything like this, you know that a sold option would actually show a negative market value and negative shares, because you've sold it to generate income and you've got to buy it back to close. All right, so another thing I wanted to point out, again, I don't want to sit and read the whole list. They're very familiar names at the top: MasterCard, Microsoft, NVIDIA, Amazon, Meta, Visa, right? Surprising to see two credit card companies both in the top 10 on JEPI. JEPQ, similar names, and I'm going to show a comparison of the two to show the the overlap within the funds. Another thing I wanted to point out is, let me find it. In the prospectus, let me show you how to get there. If you scroll up, you've got your fact sheet, you've got your summary prospectus. If you click on that, it will come up on the summary prospectus. It's just a very big picture, and it's this one's specific to JEPQ. If you clicked on it from JEPI, it would be specific there. But it's only a 6-page document, very high level. From here, if you click on prospectus, now this is the much deeper in the weeds, and they're going to be talking about a handful of their ETFs. So you've got to look where you're going to make sure you go to the right thing. But the nice thing is it's clickable links within it. So if I want to know about the investment strategies within this fund, I can click here on the contents, and it's going to take me there. And we're going to scroll down and make sure we go to the correct ETF. Okay, so we're not looking at active growth ETFs, we're looking at the equity income ones. So equity premium income ETF, that's going to be JEPI. And the thing I wanted to point out is the fund invests at least 80% of its assets in equity securities. Okay, they call this their 80% rule. They mention it again. And then when we scroll down, we'll show it. Now we have the NASDAQ Equity Premium Income ETF, so that would be JEPQ. Again, they talk about their 80% policy. So they're going to invest at least 80% of the assets in equity securities. All right, then to generate income, they may invest up to 20% of its assets in ELNs. We just showed ELNs a minute ago. They also mention, let's see where I found it. They basically say that they are able to kind of mimic the underlying with less volatility by way of selling options in order to generate income, so that even if, say, the S&P were down or the NASDAQ were down, they're not going to be down as much because they at least generated some income. But they do point out that that is also going to somewhat limit their upside in the event that it goes up well beyond their sold strike prices on their calls. All right, so the last thing, well, let's take a look. All right. This is what people really want to know about: performance. So on JEPI, if you had invested any amount of money, everybody starts with 10,000, but as far as when they're putting these documents out, but let's say you didn't have 10,000, you had 1,000. Okay, can't be less than 10,000. Obviously it can. This is just for their calculator. Fine. Since inception, so we said JEPI started in May of 2020. That 10,000 would be worth approximately 17,600, or you would be up 76%. Now we do need to look at the fine print, and it says this includes reinvestments of the dividends and gains. Now they say they haven't issued capital gains, so this would just be reinvestment of the dividends. So if you had this on drip, or even if you didn't have it on drip, but when you got paid out your distribution, you bought back in, over the 5 years, your 10,000 would have turned into 17,000. Another thing that we like to look at, in a lot of these high income funds, you're trading off, you're going to take your income from it, your distributions, and you have to make sure you look at that, because your stock or your underlying, your share price is dropping in price. So you want to make sure you're bringing in more than the drop to make sure you're making money. Well, in both cases, we said they started at $50 a share. This one is JEPI. They're still at $57. Let's take a look. Here's your all-time. So your $50 is actually worth more than it started with, plus, where did I write it? They've paid out approximately $25 in dividends in that time frame. So your investment went up plus paid you dividends. So this is different than your 80 and 90 and 100% payers that they're dropping while they're paying you a high percentage, and as long as the high percentage beats out the drop, then you're still doing well. These are doing well in both directions. All right, when we look at JEPQ, it's going to be similar. We look at the all-time, started around 50. It's still at 55.77, so you have appreciated, or you made money just on your shares without putting the money back in. Or if you did, then you see your performance. Since inception, you'd be up about 57%. That's if you reinvested your dividends again. And then those have paid out approximately $18 since inception. And that's really nice, is if you're thinking about the fact that they're 2 years younger than JEPI. So they're definitely paying at a faster pace, for sure. All right, and then the last thing I want to show you, I think I've gone over just about everything. Oh, didn't mean to close that out. I wanted to show you the overlap. So because when at first look, they almost look too similar, but when we put side by side the top 15, I went to 15 holdings, really get into the smaller, and before we got to the ELNs, the yellow highlighted is the overlap. So there's only 5 in common in the top 15 holdings, and once you get past that, we're talking about 1% or less holdings. So they are definitely 2 that you can own both. You don't have to pick between one or the other. I do want to say that none of this is financial advice. I'm just providing you information. But when you look at JEPQ, the top 15 make up 52% of the assets in the account, where in JEPI, again, like we said, much more evenly allocated, the top 15 only make up less than 23% of the money within the account. All right, so I think that's everything I wanted to talk about. If you like this video, please give it a like and share. If you like higher dividend paying funds with a little bit more volatility, obviously, then I cover ULTI, a lot of the yield max stuff. ULTI, the new short or inverse fund, not inverse, short collar strategy fund, SALTI, LFGY. I've covered some roundhill funds, zero DTEs, and I post all the links on X at ETF_inspector1. So please give me a follow over there. Subscribe if you like this type of video. I generally am doing day-to-day coverage, and I will not be providing day-to-day coverage on JEPI or JEPQ for the simple fact that they do not provide day-to-day information. They don't provide their trades, so I don't really have a lot to talk about on a daily basis. But I did just want to introduce these two people if you weren't aware of them, or if you were, if you've heard of them, but you haven't quite looked into them. Just wanted to give you some information. So thank you and have a good rest of your day.